just some kind of a bear market bounce? Well, to talk about all of that and more, we've got with us market expert Ajay Bagga. Ajay, the last 2 days make you want to believe that the worst is over, but is it?
I don't think so, and the European and US markets are showing that should be. So I think there was relief that the worst didn't come through in the budget, and 3.5% was stuck to. That got accentuated with the global rally, and that helped us along. Now, who are these FIIs who are buying after nearly 6 months of selling in India? And this was a rally we were actually expecting in January. We thought that China will come with stimulus and FIIs will return to India with allocation. So I'm really wondering these 2 days, if this continues, then we have some bottom to the market. If we reverse in line with the global markets, then we fall again. The fundamentals have not changed. Earnings have not recovered. The global economy is very fragile. There's not enough monetary or fiscal stimulus within our economy.
But then what's prompted this? What prompted the change, Ajay? Was it the budget? Was it just a snapback of short positions globally?
We were oversold and global markets were oversold. India was extremely oversold. Even in your show, week after week, I've been saying that the RSI indicators, you look at put-call ratios, we were extremely oversold. But the fundamental views have not changed. So, and if you look at it, 9,000 last March, first week of last March. Today we're sitting in 7,300 and feeling relieved. So what have we actually achieved?
Well, at least it's not gone below 6,800. I guess that's the sense of relief. But just quickly, your thoughts on the budget. I mean, has it given any further impetus or ammunition to move higher from where we are? Or is the budget adjustment, the volatility that you expect at this time of the year, is that pretty much over now?
No, I think we expected much worse. So it's come out much better, and the government has been very disciplined. I think they'll get a lot of marks from international investors for that. They've taken the non-populist route, and even if you look at the rural spending, it's a lot on infrastructure, irrigation, creating assets for the nation. So overall, good marks to the government, but there is no fiscal stimulus, there is no monetary stimulus. The markets would have rocked even more if RBI had now come in. This silence of RBI means they are really seeing where are the hidden corners in the budget, as some analysts have been pointing out that it's not 3.5% and there are some hidden things, biggest being the pay commission as against the 1 lakh crores we were expecting. It's about 60,000 crores.
For this year,
which the secretaries are assuring us we have not really seen it fully. And even the, the OROP is 5,000 crores against 10,000.
I guess two sides to every coin, as they say. So there are those who are saying the fact that there's been fiscal prudence in this budget is the reason why ratings agencies are breathing easy and the reason why we've got this short covering rally. But then, as you're saying, I mean, we don't have any kind of fresh fiscal push in budget 2016. Well, let's get you some more opinion. We hear our bankers saying that their tier 1 capital will go up by at least 1% only because of the RBI's easing of certain capital norms. Forget the 25,000 crores that's coming in from the central government, but you're not convinced. Why?
These bankers, I believe, because Jayakumar I used to work for in Citibank and I love him. So these bankers, I believe.
Okay.
But the rest of the bankers, there's a lot more skeletons which are to still come in. I don't blame them. They didn't have, a lot of times it's, and we are short on time. Maybe some other time. But one thing I'll say should be that it's a Teddy Roosevelt thing, that have a soft voice and carry a big stick. That's what Jayakumar is doing. The market is paying him respect, that I have this up my sleeve, I can revalue. So SBI, Bank of Baroda have come in and done it. Government is catching up. That's very good, because markets are in the end about confidence. You engender confidence, you'll get better valuations. I'm very happy this is happening.
All right, we'll take a quick break on that note, but on the other, we wind down our conversation. So I take your skepticism that surrounds this pullback, but what's the best way to be? I mean, you've been advocating to stay on the sidelines for a while now. Are you changing that view? Are you willing to dabble in a little bit here and there?
No, not yet.
Okay.
I think one trade you can really do is look at which are the highly owned FI stocks, and if this FI buying is continuing, stay with them. And that's why you saw the large cap run up.
The other talk that we picked up, and a lot of my colleagues from the research team were talking about, was the whole dividend play that's starting up, because companies will perhaps come out with dividend announcements earlier before the finance bill comes into effect. So does that make sense to you?
Yeah, that's a very short-term thing. I mean, and you can't even take it as a capital loss. So because 3 months and all those things kick in. But yes, I think some of them will get, especially for the FIs, if they want to book any jugglery. But I think 2 or 3 ways you can play this. Two-wheelers, I'm happy what Agam was saying. Two-wheelers are turning. They will turn better. Cement, I've stayed bullish through quite a lot of pain in the last 6 months. I think that comes through. And private banks, as Mr. Rajan cuts the rates, you could have a sell-off post-rate cutting because you have taken up a lot of that froth in anticipation of him cutting rates. So I'm anticipating the day he cuts rates, you could actually see a sell-off the next day. And please watch out, there is ECB and Fed in March. So you will see some amount of gyrations. Today, we are factoring in a 38% chance of a Fed rate hike in June. Last time when we met, there was nothing within the year. So it is a very, pendulum kind of market. You have to be very careful. Best to stay out is still what I would say. People are still too optimistic for this market, but you have to play private sector banks, two-wheelers, cement, I think, and then FMCG, IT, pharma. These are golden boys. They will come back and do well. I think in that order you can look at.
All right, so fun. We've got some commentary today. Of course, them reiterating what we already know, I guess, Ajay, that yes, there is a problem in the system. Corporate balance sheets are stretched. But your view on this massive short squeeze that we've seen, can it take bank stocks even higher? In which case, I mean, should you be trying to buy this dip if you're buying the fall, if you're an aggressive trader?
Don't buy. But, the shorts deserved it, Surabhi. It was a very easy trade. You just take which are the stocks owned by the foreigners, go ahead and short them. And sooner or later, look at what was happening to HDFC, for example. Nothing wrong with the company, just getting hit, over-owned by the foreigners. And you saw what was happening. So I'm very happy these 2 days have squeezed out the bears to some extent. I hope it continues. I am a perennial bull. I would hope it continues, but my heart and my mind tells me it won't for too long. I hope the bears get shaken out at least. That's when you have a market. I think what is very clear, this is a great market for alpha generation. So the good fund managers will make much more money because the broader market is going to be volatile. It will whipsaw and clean out people. You will not make returns. Second, earnings. The foreign brokerages have been perennially wrong. They start with 17-18%, they get down to single digit. This is a lost year in earnings term. Mark my words, I'll come back next year and we'll discuss it. Earnings are not growing. Third, you've not seen the tip of the banking cleanup. We had 45,000 crores cleanup last quarter. It's going to be more than 70,000 crores
in the fourth quarter.
In this quarter.
Let me hold your thought over there because we spoke to 2 big bankers today and got a sense on what the RBI's new norms with respect to additional capital will mean. So Anshula Kant of SBI and P